Hello traders, hello everyone, welcome to our new webinar. It's Monday, September 15th, so are we good to go? Can you see my screen? Thomas is here, Enes is here, Al Khalifa is also here, so okay, we are good to go. So as you know, the market is interestingly moving quite a lot today. Finally we are seeing some push to the upside, and there have been some notes from Donald Trump that he is basically, obviously, he wants lower interest rates, and he thinks that it's too late and that they must cut rates bigger than what is expected. As you know, the market expects what I think it's 25 basis point, but they could go even further and make the 50% basis point cut. So I'm pretty sure that markets will be quite volatile, and of course, we are anticipating that dollar will stay weak because of these rate cut expectations. Now, if we take a look here on on the US yields, we still are seeing prices moving to the downside. We are seeing quite a sharp drop. So dollar did not move lower at the same degree, but I still think that even more weakness here is certainly possible, even if that's the final stages of a triangle, or possibly we are in wave C if we will break this lower trend line support and maybe even collapse through 3.9%, and even we can see 3.8%. So if that would be the case, then of course dollar index would be much easier to retest this 2025 lows. So dollar index is here. We are still focusing and still focused on this pattern. I'm tracking the potential ending diagonal. It's not really the best perfect shape, but what's the most important for me is that we have plenty of overlaps and a lot of free wave flags in each of directions. So certainly this could be the pattern that sooner or later will maybe bring dollar index to new low and potentially complete the higher degree downtrend from January, from start of this year when Trump took office. So for now we are still focused on more dollar weakness, meaning that until we see these new lows, this dollar weakness in my eyes is still here, and risk on mode obviously could resume. So there are still chances to look for potential opportunities on other major currencies. I like really Aussie, that I will cover a bit later. But before we go to Aussie, I want to look at euro dollar. We are now moving closer to this July 2025 highs. We also last week we took out this channel and then came back and retested it, and now it looks like that we are trying to print higher swing high. But keep in mind that again, it's Monday. We could easily see some new retracement in the next few sessions, few days before Fed would really decide what they may want to do next. Of course, cuts are on the table. The only question is how much they can cut. Can they surprise? And it means if they can come out with a 50 basis point, you will see a very strong drop on the US dollar. But keep in mind that now, if they were still not really convinced in the last few months that they want to cut rates, and now they will suddenly maybe cut 50. Well, it means that there's less chance that they will have more cuts later. Okay, so this means that despite the fact that they could cut rates for 50 basis points, maybe even no, who knows, maybe even more, then it means dollar could drop. But then if the message will be that we cut for 50 or even more and now we are done for some time, well, it means that dollar, after the initial reaction to the downside, could basically turn the trend. Okay, so that's something that we'll have to consider. Of course, the most important will be the press conference. So for now, euro dollar obviously still looking for 119, maybe even 120, but up there, once we will be at new highs, I would be very, very careful, and I would not be that bullish on the euro anymore. Of course, trend will still be up, but of course, I want to be early with some indications that potential limited upside could show up later on. So for now, euro dollar is still in uptrend, but notice that already from late August, despite higher highs, higher swing lows, we are not having an impulsive characteristics here. Okay, so even if bulls are here, they are struggling a bit. Okay, for an impulses, you want to see some sharp reaction higher with an extended lag, much more than the previous rallies here. So this tells me that maybe yes, we could be moving into resistance later on up here. Looking at cable, as you know, we perfectly called this reversal and head and shoulders potential bottom formation with the right shoulder here. We rallied impulsively, and now finally we are breaking this 136 level. So looks like that there can be more upside coming, but keep in mind that this neckline could still be retested with some near-term retracement before eventually we'll see more gains. So I'm bullish on cable. I'm expecting more gains for sure, but maybe if we'll get some retracement here, that's something to watch for in the near term. And even if we get a dip back towards 135.30 or 50, still this could be an interesting support around this minor swing lows here around the channel. Looking also on Aussie, as I said, now the big thing is here for the Aussie that we are, not sure that if you noticed, but we are basically testing this trend line connected from 2021 highs. Okay, so that's the pretty important big potential breakout here. As I said already a few times, that I think that commodity currencies could do well. Even if dollar index would stabilize, it doesn't mean that commodity currencies cannot do well, because dollar index obviously it's not calculated from commodity currencies. So here of course I would be expecting more upside, and I really love how the price action is looking. So firstly, we are trying to break this trend line. Okay, and now if we take a look on a smaller time frame, it's the 4-hour chart here. Notice that this rise from August lows is not in 5 waves yet. So in my opinion, even if that would be limited upside, and at some point we will reverse significantly to the downside, firstly I want to see a completion of this impulsive structure. Okay, so I think that maybe, let me just adjust this for a moment, maybe we are going to see more gains after this wave 4 pullback. So what I really love here is that on the first attempt market failed to break higher, then we have seen this reversal to the upside after this dip, which this move, as you know, came after inflation report last week came out around expectations at 2.9%. So I've been telling that possibly even if number will be forecasted, it's been higher than the previous month, but because it was forecasted number, dollar of course was not did not find any buyers, because if it's forecasted number, market is still focused on potential rate cuts. So because there were no negative surprises, of course we are seeing a resumption of dollar weakness, on the other hand of Aussie strength. And if we see some pullback here, let's say that maybe ahead of Powell we see some retracement, I think that it's a very nice beautiful support around 66.25. so if someone is looking to maybe at some levels, this I think it's something to watch for. Below that you have 65.90, but of course we must stay and remain above this invalidation level at 65.61. So as long as we are above that level, I think that buying dips here still makes sense. And the reason why I'm looking at Aussie, why I think it's very interesting, is because it's been one of the strongest for the last 3 weeks. So basically, someone that is maybe trying to compare the strength of different currencies, some will look for performance on a weekly basis. Some, especially, that's very useful if you're looking maybe at some intraday setups. Some will look for performance from the start of the month, but I usually try to focus or try to look at performance from important dates or swings that occurred on the market. And I will here take this August 22nd. It's been Friday. So why I took this one, if maybe anyone know, it's when Powell had a speech in Jackson's Hole. So back then it was the first message from here that he hinted that, or highlighted that, he sees some risk in unemployment. So back then we have seen these massive reversals on a lot of these currency pairs, and you can see here that NOK, Aussie are one of the strongest since then. They are on the top. Keep in mind that inflation in Australia, the latest CPI figures, also I think it came out a lot above the expectations, very hot. So of course RBI is not looking to cut rates if inflation is still a major problem there. So this definitely could keep Aussie in uptrend. So if no cuts from the RBI and cuts from the US are coming, that's why we are seeing this kind of a strength of Australian dollar that is doing pretty well here. So that's why I think that this next pullbacks on dips could be very interesting here on Aussie. Also, if you take a look on Euro Aussie, we talked about this one as well, that we could be looking for potential completion of this correction after the first retest of the 61 here back in July. We have seen another retest in August, but now notice that this reversal down that we also, I think, last week or 2 weeks back we covered in our webinar here as well, we have seen impulsive sell-off, and now you can see that market keeps moving lower. We broke very decisively here, and now even retesting this bearish level. Maybe some near-term rallies could occur, but I think that after rallies we could see more weakness. Certainly see this as a counter-trend movement, and that if that's the case, I want to see this counter-trend movement fully retrace. So my zone to watch for is certainly this one. Okay, so I think that until we see these levels, Aussie could really do well. By the way, guys, don't forget to press a like here so that we'll try to grow on YouTube, or leave me some comment later if you'll be watching this recording, or even we have some live chat here as well, as you can see on YouTube. Now let's take a look on dollar CAD. Now dollar CAD is also trying to make a new swing high here, and I love how it stopped at the 78.6%, but Canadian dollar hasn't been that good recently. When other currencies were quite strong versus the US dollar, Canadian dollar has been struggling, but even this one is now trying to turn bearish. So if Canadian dollar that is not that strong is now showing potential bearish setup here, then of course I think that dollar will certainly stay weak here. And also this one has a very nice risk reward, much better maybe on compared to some other pairs that are far away from the invalidation levels. Here we are now testing this channel, so maybe daily close below 138 could finally confirm that we are in a third leg sell-off here. Invalidation level, the short one is here at 1.3925, and I certainly think that at some point we will retest these lows, because that's an impulse from January highs that is still incomplete. Now looking at dollar yen here, it's still stuck in the range, but there were some comments last week that rates are too low. So maybe that's something that could contribute to limited upside. We still haven't actually broke the upper side of this potential triangle that I'm observing. Could be even a barrier triangle if we will see this next swing lows again around the previous lows here. So still, it's a very strong horizontal support around 146.30, but I think that eventually even this level will be taken out, because I think that we are just headed to the lower side of the range, as I already discussed last week. But even if that's a triangle, it's not really finished yet. I've been updating our members with the intraday charts a few hours back, and I said that triangle is still possible here, but unfortunately it's not complete. Okay, so if you're looking to short the US dollar, maybe Japanese yen, with this kind of a performance, it's not maybe the best one to look for. But at some point we know that if US yields will keep moving to the downside, dollar yen has been usually very nice tracker of that lower US yields. Looking at gold, maybe not bad idea to look at the first at the daily chart. So we are here, okay, here this at the first triangle measurement target. Okay, so I took the distance, as you know, if you were watching our videos in the past, of this triangle widest leg, and then I projected this target from a breakout point, from end of a fourth wave, but from a breakout point the triangle target is much higher, even closer to 3,800. So there's still room for more upside, but again, you are here in fifth wave moving out of a triangle. Triangle occurs prior to the final stages within a higher degree impulse. So you are now in a final leg, meaning that I think that by the end of the year we could see some very important top here. But if you look at the 4-hour time frame, we are not completing this wave 5 yet. I'm looking this to be wave 1, wave 2, wave 3 that moved close to the 261.8%. Could be maybe still that we'll see more upside in wave 2. But what would be my focus is if we see a bit of more complex correction that could be maybe similar in time compared to this wave 2. It doesn't necessarily mean that it will be similar in in price retracement, okay, because sometimes you have to respect the rule of alternation, meaning that if wave 2 was deep, wave 4 could be a bit slow, maybe even some kind of triangle, or maybe even a flat, something to be more complex. But once this time will arrive for this next consolidation, that's when new traders could be looking to join this trend, okay, especially on dip. So if we see some pullbacks, I think that 3,600 down to 3,560, that could be quite attractive, interesting zone here. Also looking at silver, so not sure if you noticed, but last week at some point silver broke higher here. I think it was this was on Friday, Friday, but here you can see on Thursday, Friday, basically for the whole week, since Tuesday, gold remained stuck in the range here. Okay, so silver was outperforming gold, and this could still continue, because if you take a look at the gold silver ratio, well, it looks like that we have some very nice ongoing decline here, and we recently, this sell-off that occurred here in the mid of the last week, that's when silver took over gold. And I still think that maybe after some retracement here, there could be more weakness. So if I would have to choose now on the next pullback, gold or silver, I think that silver could be very, very interesting, especially if we will see some kind of a deeper retracement here. Okay, now looking at crude oil, maybe firstly this chart that I also shared last week on X. So here we stopped at the 61.8% for the first time back in July, then in August or early September, again close to the 61.8%, and now again trying to fail at the 61.8% of this smaller leg. So I still think that's a pretty interesting, powerful pattern. It has a very beautiful personality here, and based on this just simple FIB approach here, I think that more weakness is in the cards. And the reason why I think that's probable, not only possible, is because if you take a look closely here at these lows from August and here September, early September, we basically still didn't take these lows out. Okay, so I think that we are yet to see more weakness. Of course, this can become even more complex, but even in a complex pattern, I would be looking this to be some kind of a triangle, meaning that later on I would be looking for more weakness. So here's my wave structure. Could be maybe 1-2 bearish setup for a wave C, or possibly we are in a triangle, which I may try to switch to a triangle this week, because whenever I see price action like that, I don't want to call like 1-2 many of 1-2 bearish setups, especially if we are more in a sideways and still holding the previous support. Then I'm looking this as a whole one correction rather than several corrections of lower degrees. Now looking at the S&P 500. So the S&P 500 here, I shared this chart, I believe last week. I said that we could be seeing the fifth wave here of an extended wave 3, so possibly we are approaching some resistance, but there is still a room maybe to 6,650 or so, but definitely not above 6,700. However, that doesn't mean that we will be in some kind of a extremely bullish trend here, like a wave 3 of 3 from that latest September lows. But what I would be looking for is most likely this one. It's been the count that I also shared with members last week as well. So here it's also showing that 6,700 is the next very big level, but the only question is, we will get a retracement from there or no. Of course, everything is in Powell's hands, as you know. If he will be very dovish, if there will be only 25 basis point cuts, and he will say, okay, maybe we'll be looking on for next cut, especially if jobs data will weaken, then this will be a message that will keep these stocks in recovery mode. If he will come out with a message like, okay, we cut 50 today, not 25, 50, and we will see what data will come out next, and we will respect the data, then it means that maybe stocks are about to see some retracement, because it would be really uncertain if they are going to cut more or no in the future. But of course, markets expect that they will do more cuts this and next year, so that's why we are seeing keep very nice uptrend here for several months now. Now let's take a look also on Bitcoin. So as you know, based on two wave counts last week, I discussed that we are expecting a recovery. What kind of a recovery will be and how far we can go, or will this take us back to new all-time highs or just limited upside? It's yet to be discovered, and same for today. But the idea is that I was looking for two wave counts. So the first wave count is that was a leading diagonal, and you expect a counter trend movement back towards 117k area. The next is a very bullish wave count, shows that 17k and even higher prices could also be reached if you consider that this might have been an ABC pullback. So this wave count is also still valid. So both counts are still valid, but it was much easier for me to predict what will happen down there rather than saying what will happen from here, because there are a few important things that we should watch for. First is that, same as are the gaps, very important on the downside when they are unfilled and going filled, when they are open lower. Once they are filled, market will rebound to the upside. Everyone expecting that uptrend will resume. Well, if that's the case, then you have to respect something similar on the opposite side. So that was a gap that we were also looking at to be filled around 117k. So this has been filled, this zone right now, and these prices are already struggling up here. So I'm not really convinced if short-term holders will be awarded just so easily and we will print new all-time highs. I certainly would not be surprised if there will be some more pullbacks, but of course we will see what will happen next. If we can break 118k, then we are in good zone for this bullish trend to resume. Now, the one more thing why I am very careful up here is also when looking at Bitcoin liquidations heat map. Notice that we are seeing an increase of stop losses of orders from those who are longs down here. Okay, so this means that there are a lot of traders, a lot of optimism that are betting on higher prices. And as I said earlier, market may not just that easily award everyone. Okay, so maybe, who knows, firstly we have to liquidate the weak hands, market get rid of them, and then we see a recover later on. That would be probably the ideal scenario. I'm not saying that this will happen, but these are the levels that we should watch for. Okay, so it doesn't mean that it will be any kind of aggressive bearish call. If we see these levels down here, I still think that would be a pretty interesting support. On the upside, I'm also seeing that some liquidation pool is increasing here around 120k, so this one could also be important, maybe even based on the first wave count here, which shows that we could be maybe in an impulsive fashion. So wave 5 maybe stops up there and then you see a retracement. So Bitcoin, be careful. Also, if we take a look here on these short-term holders, value above 1 or around 1 indicates that more short-term investors are selling at a loss. Okay, and also for now, if you take a look on this data, well, there are a lot of short-term holders that were selling at a loss back here in April. You can see these spikes, and also in February and even March, and also in August 2024, also July 2024 as well, and as well here in April of that same year. So these are some kind of a spikes where there is a lot of pessimism. So we haven't seen these extremes yet. So if I would have to guess or look for potential buying opportunities, I would rather wait on something like this, when there will be a lot of short-term holders that will be selling at a loss. Okay, so it means that should be the value well below 1, but we are not in that zone yet. So I'm just wondering if maybe there is still some fear in front of us. So if the price would really pull back, you will see that this data will spike lower. A lot of short-term holders will be booking their profits, especially, as I said, if these liquidations would be taken out by the market, and then I would be looking for a rebound. Also, if you're looking at Ethereum, it's not really convincing bullish structure here either. I mean, here what I see is that we are trapped in some kind of a range. Not sure if we'll see a deeper ABC retracement, or maybe just recently we have seen a limited upside here, maybe for wave C, and we will see a push to the lower side of this range for a wave E. So still in the short term, not something that would catch my attention here. I really I'm more like on a sideline neutral here on the Ethereum. It's not really it did not really convince me that we are headed higher. The important level could be around 4,400 down to 4,350. What will happen down there? Now, what is saying? Okay, thank you, Casual Friday. I will get back to you. So that's for the Ethereum. Ripple is looking maybe much better. So if I would have to buy something, maybe Ripple would be on my radar, because we broke out of this corrective channel. We rallied apparently in 5 waves, and now we are in a counter trend pullback here. So I think that as long as we are here above 2.7, I think that there is 268. I think that there is a chance that this one will resume higher. Now, also when it comes to cryptocurrencies, even MicroStrategy, you know, it's still trapped in the range. I think that this could possibly be a triangle. Even this drop, maybe it's unfolding in impulsive fashion. So second, third leg, wave C of this triangle could still be a bit deeper. And as long as we are sideways on this one and trading below 460, I think that that's how long there will still be unclear direction maybe for Bitcoin itself as well. Now, if we look at some other stocks, Netflix is here. I think that I covered Netflix not a long time back, but they said that most likely we are trapped in consolidation here, and so far we have a very beautiful price action, which certainly calls for more weakness in the next few weeks. I mean, that was a very powerful reversal here to the downside, and more importantly, that was only free wave rebound. So that was wave B, meaning that wave C could extend a bit lower. So if you're looking at some of the single stocks and maybe patiently waiting how market will react to Powell, so if we'll see some retracement afterwards, I think that supports here around 1000, 1100 could be pretty interesting for Netflix to stabilize at around the previous swing highs here. Also, Nike is in a pullback as well here. I'm still patiently waiting for price to retrace back to this earnings gap from reported in June for the first quarter. So here I'm still expecting a bounce later on. We have some gap here, as you see right now. Maybe we can retest it first, and then after a free legs into that much more important zone here around 63 to 69, maybe then we can rebound. So that's how I would look at it. But definitely it's a very interesting pattern, especially if we consider how the big picture looks. And by the way, if you don't know yet, we have the US single stocks. The PDF report is sent out a few times per month, and I think that we have some very interesting developments there. Now let's take a look also on Nvidia. So Nvidia came out very close to this my yellow box, the first support here, but notice that we just gapped higher and now still maybe will stay in this range. So I would just patiently wait, especially because it's an important week, maybe on some more weakness or at least sideways price action, and then maybe react after the Fed is behind. But certainly buy dip still makes sense to me here, because I believe that we are just consolidating in a wave 4 and that wave 5 is yet to come. Also, if you look at AMD here, this one also came close to this yellow box as well. We stabilized here back at the very previous swing highs and these swing lows, not really reaching the 38.2%, but that's fine. I mean, whenever you have this extended leg, like in our case, you may not see a retracement like a textbook fourth wave for the 38.2, but still, even if we see some unexpected new dip, I mean, it's still a very nice retracement within uptrend. Maybe even some head and shoulders could also be playing out here. So this could be left, right, and ahead, and you're right now at around the neckline. So maybe something more complex or deeper. And if we also maybe take the distance of this land here, of this one, and then compare it from the previous top, maybe the pullbacks can be very similar. It just tells you that it's just a healthy pose within ongoing strength that I think could still resume this year back towards this 2024 highs. So that's it for me for today. So if you are interested in more of these analysis, make sure to visit us at wavetraders.com, where we cover a lot of those markets that I just went through, and plenty more. So casual Friday, very good, Nick. If I can talk a bit more about Elliott Wave School videos. So in this Elliott Wave School videos, I discuss about Elliott Wave theory in general. I discuss about the structures, the details of the wave principles, of the fib levels, how to approach the market, how to analyze the trend, and what other tools can be very useful when it comes to discovering the Elliott wave principle and finding the potential opportunity. I also look how I use channels, how personality of price movement is important, not only the rules and guidelines, but also the personality. That's maybe on top of the list. That I think it's very important. And also walk you through several examples how I approach some trades that worked, some that didn't work, okay, because that's how we learn from mistakes. I also have some old videos as well there with some examples how I analyze the markets in general. Okay, so traders, that's it from me for today. So if you're interested in our services, make sure to visit us at wavetraders.com. If you're interested in this Elliott Wave School videos, by the way, there you will get also a free month access to the FX and crypto, absolutely free. So if you will sign up for this, then make sure to keep an eye on this offer. Traders, good luck today and this week. Certainly should be very interesting and volatile, so be careful out there. Bye.